First of all, congratulations! If you decided to start investing, it is probably the best decisions in your life. Investing your money is the most reliable way to create wealth over time. And if you are new to the investing world, I'll do my best to help you get started. It's time to make your money to work for you. But before you put your hard-earned money into an investment vehicle, you'll need a basic understanding of how it works. And in this video, I'll tell you about first steps and what should you consider first. Hey there, this is Taxpert. I make educational videos about personal finance and investments, exploring with you the investing world to get more returns. If you want to see my other videos, check out the card section and the description of the video. And let's smash the like button and subscribe to my channel first, and then let's go. So what is the best way to invest your money? The best way to invest is actually whichever way works best for you. You will want to consider three things. It's your style, your budget, and your risk tolerance. Talking about your style, this mostly depends on how much time do you want to put into investing your money. The investing world has two major camps: active investing and passive investing. Generally, both styles have merit, but you might prefer the one type over the other depending upon your lifestyle, budget, risk tolerance, and interests. Passive investing associates with more simplicity, stability, and more predictability. It can be described as a hands-off approach, gives moderate returns, and there are sometimes tax advantages. While active investing associates with more work, more risk, and more reward, but not always. Here you do the investing yourself or with the help of your portfolio manager, intensively research, and there might be potential for huge life-changing returns. I personally prefer passive investing due to several reasons, but this is another story to tell. Let me know in the comments what style works for you so far. And second thing to consider is your budget. How much money do you have to invest? You may think you need a large sum of money to start a portfolio, but you can begin investing with as low as $100. The most important consideration is to have an emergency fund. This is cash set aside that is available for quick withdrawal if needed. All investments, whether stocks, ETFs or real estate, and you never want to find yourself forced to divest or sell these investments in a time of need. The emergency fund is your safety net to avoid this. Do you already have an emergency fund? Let me know in the comments. And the third thing to consider is your risk tolerance. How much financial risk are you willing to take? Not all investments are successful. Each type of investment has its own risk, but this risk is often correlated with returns too. And it's important to find a balance between maximizing the returns on your money and finding a risk level at which you are comfortable. For example, bonds offer predictable returns with very low risk, but they also yield relatively low returns. By contrast, stock returns can vary widely depending on the company and time frame, but the whole stock market on average returns almost 10% per year. And again, remember that the best way to invest is whichever way works best for you. You want to consider your own style, your budget, and your risk tolerance. And if you are ready for the next step and asking me to tell the actions to take, here's a video with step-by-step guide on how to start investing. Check out also books that might help you start with investing. I leave them in the description of the video. And don't forget to like the video and subscribe to my channel. Bye!